Good afternoon, ladies and gentlemen. My name is Andile Khumalo, and I'm your host for the next hour or so as my esteemed panel and I tackle the issue of impact investing and its transparency, whether it's in practice or in reporting. Much has been written about the concept of greenwashing, and for those who do not know, that is a process of conveying a false impression or providing misleading information about how a company's products or operations are more environmentally friendlier than they actually are. Now, all of this stuff affects the ability for investors and asset managers to allocate capital to projects that indeed have an impact on society, the environment, within the context of good governance. Part of the challenge that has been noted is a couple of things. One being a standardization in measurement and reporting, but also, and perhaps more importantly, a lack of genuine will to do the right thing. By who? By investors and also companies alike. Delivering alpha has suddenly become a lot more complicated than before. Welcome, ladies and gentlemen, to the Financial Mail Green Economy Digital Dialogue in partnership with RisCura, Mergence Investment Managers, Nedgroup Investments, rather, yes, part of Nedbank, but it's Nedgroup Investments, and Standard Chartered PLC. Let me get through some housekeeping rules for you. If for whatever reason you get kicked out or your connection drops, there is a Zoom help function that's on Zoom. If that doesn't help you, it often works out if you just exit the session and click back on the link that you were emailed to come back into the session. That tends to restart the whole system. I also encourage you to use the live chat. Please, please, please. This is not a one-way conversation. This is a conversation with you guys that are joining us as our audience. Put any questions that you might have for my esteemed panel. I will be getting a feed directly of all of those questions, and I'll be putting them to them. It'll help me, of course, if you tell me who exactly you would like to send the question to. If you're not sure and you're happy for anybody to answer the question, that's okay by me as well. If you are on social media and would like to share some key takeouts out of today's conversation, the hashtag that we are using is hashtag FM Green Economy. That's hashtag FM Green Economy. And if you'd like to also tag or follow us, you can follow Financial Mail at Financial Mail on Twitter. Now, let me introduce you to our esteemed panelists. From Mergence Investment Managers, we have Kasief Isaacs, who with over 17 years of experience in the financial services industry. Kasief joined Mergence in 2015 as a senior investment principal. He has a specific focus on energy, infrastructure, impact within South Africa and the SADC region. He leads the private markets investment team, which has built up a stellar performance record for the past decade. And before he joined Mergence, Kasief was with PwC in their renewables energy practice, and he's advised developers and investors from South Africa, Spain, Germany, China, all parts of the world, including the United States, on South Africa's renewable energy market, including their participation, of course, on our REAP program here in South Africa that's been really hailed globally as one of the best. He's done project acquisitions, he's done PPAs, BE structuring, and also funding. So welcome, Kasief. Thank you so much for joining us, sir. And from Nedgroup Investments, we have David Levinson, who is the head of responsible investing there. After completing a business science degree at UCT, David moved to London, where he spent 6 years at Deutsche Bank, working with fixed income. And upon returning to Cape Town in 2014, David completed a postgraduate in sustainable development at Stellenbosch University, which opened the door for 3 years as a sell-side ESG research analyst. So he's somebody who knows a hell of a lot on ESG. And after spending the majority of 2018 traveling across Europe in a camper van, David joined at Nedgroup Investments as a senior investment analyst. David, I'm sorry, that sounds like a demotion right there. But anyway, we all make choices. He's now head of responsible investing, and he's spearheading Nedgroup Investments' drive towards becoming a leader in responsible investing. From Standard Chartered PLC, the only lady on our panel is Michelle Swanepoel. She's joined Standard Chartered in 2017, based in Johannesburg, appointed as head of security services for Africa in May 2019. 24 years experience in the industry and a collaborative and partnership approach to institutional client management. Michelle is an expert on something called post-trade. If you don't know what it is, you're in the right place, because she's going to be teaching us how important this issue of ESG is in the post-trade industry. She's been doing this across the continent, of course, of Africa, has been very instrumental in the evolution of the industry across the sub-Saharan region. She's been busy identifying all sorts of business development opportunities and spearheading successful market penetration and product initiatives for domestic and international clients across the region. Now, her experience spans roles across product development, sales, relationship management, and of course, client service within what we like to call the broader securities services industries. Michelle, thank you so much for joining us and breaking the mold here as being the rose amongst these thorns. The last thorn to introduce is Glenn Silverman. He is from RisCura. Since July 2021, Glenn has been with RisCura as an investment strategist. He's a director also of the investment management business. He's the chairman of the Investment Risk Oversight Committee and a member of both the Global Investment Committee and its various subcommittees. He had originally joined RisCura in 2020 as a consultant and a strategic advisor as a non-executive member of the GIC and its subcommittees. He's got over 30 years experience in the investment markets, including engagement in multi-management, exco and board levels, strong interests in Brics, we might touch on that as well, and also responsible investing. Before he joined RisCura, Glenn has worked for companies such as Investment Solutions, which, as you know, is now called Alexander Forbes Investments, for over 17 years, and another 7 years at RMB Asset Management, which is now part of Aluwani Momentum, and also at the current Stan Lib. Lady and gentlemen, you are most welcome. It's so good to see you all. And I hope certainly, that for the next 54 minutes or so, we'll be able to do justice on this theme of how do we ensure that we get transparency around impact investing. But of course, we're going to start early in the conversation. And the first question that I would like to pose to all of you guys, just to give you an opportunity to also just add your own flavor to the theme. You know, the preamble of our theme and the invite that many people that have joined us today that they received, it referred to a focus on environment, social, and governance, which of course is ESG, that these factors are vitally important to decision-making and how impact investing should be a tangible goal that delivers, and it should be showing how it's delivering. I'd like to start by asking each one of you to first introduce us in more detail of how your respective organizations approach ESG in your everyday operations and lives, and also, what do you think of the role of the private sector? What do you think it is when it comes to creating a sustainable future for South Africa and I guess the world at large? Let me start with you, Kasief, on your initial thoughts.
Thanks, Andile. Good afternoon, everybody. From Mergence's perspective, we have been balancing our clients' needs and we raise all our capital from institutional investors to deliver sound financial returns, but also in parallel to that, meaningful impact. So our first product that focuses on this, we launched back in 2011. And to distill it to its simplest form, we see that we all and our clients, we all want to retire financially secure, and that's where the financial return element is important. But that's not going to go very far if the infrastructure and services we need does not exist or is not sufficiently capacitated. And so since inception of our first private markets or unlisted fund, we've always strived to deliver that combination of financial returns and impact. Impact and ESG is deeply embedded in our investment process. We are internally also driving better transparency. Historically, it's always been easy to report on the number of jobs we create, but we are now refining that framework to include things like carbon emissions, water consumption, and broader environmental metrics around all of our portfolio companies, so we can demonstrate that balance to our clients more clearly.
And Kasief, is it your experience that the issue of sustainable investments or impact investing for you and your clients and the monies you manage has become more and more important to investors? And why? Especially if we think, 20, 30, 40 years ago, it was all about a financial return.
So it definitely has become sort of front and center. I think over the last 2 years, we've seen even further sort of acceleration of that momentum in the globally and in the South African market. I think that realization, whether it's a combination of sort of global climate change that's hurting us all, issues like COVID, all of those have helped to elevate the topic. We're also starting to see I think where we see, maybe just to look forward for a second, where we see the next wave coming is pension funds particularly are saying, great that you're delivering impact, but as our managers, we want you to try and bring that closer to home. A lot harder, but they're starting to push to see impact for their members or within their industries. So that next wave will come sooner rather than later as well.
Very interesting, very interesting. Starting to localize that impact. David, let me come to you at Nedgroup Investments. What's your take, ESG, on your everyday life?
Thanks, Andile. Just to check that you can hear me okay?
Absolutely.
Okay, I dropped off during your intro, so I was doing some Hail Marys that Nedbank were paying for their Wi-Fi bill, but it said I have a weak connection. So hopefully I don't freeze in a horrible facial expression. If I do, I'll just drop off and come back on. But I guess to give the problem statement some context, yeah, I mean, if we think about where the world is from a climate and a social perspective, socially we always seem to harbor a little bit on the negatives, but on the positive side, people are living longer, more people have access to healthcare, highest rates of school participation in the world and literacy rates. There are more people obese than are hungry today. I think if we rewind a few 20 years ago, it might have been 800 million people living in starvation, and we might even be half that today. So I see the lights have just gone off here as well. So maybe Nedbank haven't paid the lights bill, but when someone else speaks, I'll go see if I can.
I doubt that very much, David. I doubt that very much.
There we go. It's motion censored. So yeah, in the context of that, the world is approaching 8 billion people next year. About 7.7. So what that does is it puts a lot of strain on the Earth's natural resources. So the problem statement is, how do you meet the demands of 8 billion people without compromising the ability of future generations to meet their own needs? So that's kind of the sustainable development definition, while managing, I guess, finite resources across the world. So that informs a lot of Nedbank's thinking on the sustainable development goals. And then on the ES and G, maybe a few panelists and people read the Economist piece, I think it was last month, their front cover piece about basically asking for the unbundling of ES and G to focus almost purely on the E within asset management, and within that almost entirely on carbon emissions. We think that's maybe an oversimplification and potentially more of a northern view than what we're experiencing here in developing countries. We think it's a little bit more complex, but I think it draws light on the complexity of the relationship between the environmental and the social.
Great stuff. Thank you for those opening thoughts. Michelle, let me come to you on the post-trade side. Your thoughts?
Thanks, Andile, and really great to be here. And I definitely am the Rose, because I'm the only woman on the panel today, and also the only one from the post-trade industry. So I think before I start on my comments, I'm going to demystify what the post-trade industry is for everybody on the call today. But essentially looking at services such as custody, asset servicing, and trustee services. So the administration functions that sit behind an investment decision, really, in terms of making sure cash and securities are exchanged, as well as the trustee function predominantly for collective investment schemes. So maybe just a little bit around Standard Chartered's focus on sustainability. As an emerging markets bank operating in 59 markets across some of the world's most emerging economies across Middle East, Africa, and Asia. Our brand promise of being here for good really denotes a very distinct focus on sustainability and operating in the best interests of the communities that we function in. We've established a specific sustainable finance function in 2018 that really looks to support our clients across a number of instruments, and also ESG advisory functions, which looks to support clients as they evolve their ESG strategies. Together within 2019, and we're talking about transparency, launching our first green and sustainability framework, which really looks at revising annually and also ensuring that a company called Sustainalytics reviews that framework in terms of what we deem to be products and themes that are categorized as green and sustainable. We've also launched 2 sustainability bond issuances in the last 3 years, and also produce a sustainable finance impact report every year, which is a contingent or a requirement in terms of our bond issuance programs, but also provides transparency in terms of the impact of all of our sustainable, financing asset pools. Really proud to say that in 2021, our sustainable finance report reported that we have a sustainable assets portfolio of $9.2 billion, which is 138% increase year on year. So that's a little bit around the bank, but I'm from the custody and security services business. So we operate in 40 markets across our footprints. In South Africa, we manage around 30% of the unit trust assets under management. And really what I'm here to discuss today is how does the custody and trustee function play a role in terms of the ongoing monitoring and ensuring transparency of an investment portfolio, instrument, or fund after the investment decision has been made. Now, this is it's an evolving arena in terms of this particular topic. We're not there yet in terms of what we could potentially do, but I'm really here to talk about what is the future look like in terms of what a trustee or custodian can offer in terms of post-trade monitoring and ensuring ongoing transparency, particularly where you have complex portfolio activity. So we know that, listing requirements are evolving, disclosure requirements on corporates are more robust, but when you start commingling private side investments and evolving asset types like crypto, etc., as well as fixed income, you start getting a really complex environment of data to support ongoing transparency around investment portfolios. And we feel strongly that the post-trade environment has a role to play. And I'll discuss a bit at a later stage where we think we can add value into the future. Thank you.
Absolutely. Absolutely. And I will definitely be posing those questions to you, Michelle. Thank you so much for that introduction. Glenn, RisCura, you are also in the world of managing a lot of capital on behalf of your clients. And I noted in your own personal profile that you're very passionate about responsible investments. Impact investing in your world at RisCura, what does it look like?
Andile, thank you. So I thought maybe start with myself personally. Some 10 years ago, I was asked to do a presentation, which I did on sustainability from an investment perspective. I was asked to do it once. I ended up giving the same presentation locally and internationally 30 times. So it was a topic that certainly gained a hell of a lot of credence, piqued interest of many people, but the conclusion was very interesting. At the time, people said this is very complicated, very beautiful presentation, too hard for us and actually not that relevant. And then a year ago, I was asked by one of my clients, it was pre-RisCura days, to actually do an update on that presentation, which was something I titled ESG, Is This the New Green Bubble? So this is the biggest theme out there in the world by far. Nothing comes close to touching it, the sums of money that have flowed into this particular space. And I dealt with some of the complexity around that. So that's kind of been a little bit of my own personal journey, but RisCura actually predated me. They've been doing this for a long period of time, both focus on responsible investment and sustainability and ESG, also unlisted investments and the likes. They consult a third of all the large pension funds in the country, including the biggest of all. So they have a very detailed and passionate exposure to the area. We also have a product that we will talk about a bit later that we're very excited to be launching and have just in fact launched. And so, yeah, I guess in some ways, Glenn, Silverman and RisCura come together more recently. I've only been there for a year, to progress this discussion.
But Glenn, before you go, let's address the something I would call the green elephant in the room, right? I mean, David has already poked it, and you suddenly poked it some more. ESG, is it a bubble? He's referenced the Economist articles. I've certainly seen it. I've definitely read it. And you do get the feeling that there was a time when everything was about ESG. It was a swear word if it wasn't in anybody's investment report or integrated annual report. All had to show how we are playing our part in ESG. And suddenly, everybody's now focused on just climate change. It seems, floods and weather patterns and everything. Seemingly, the human race has suddenly realized that the stuff we've been doing for the past 100-odd years has had this impact. And suddenly, it's no longer about environment, social governance. And I would argue that social is probably more important in our context than, maybe the environment. But it seems that ESG is losing its shine. Let's talk about that, Glenn. What are your thoughts?
Well, my pity is I can't give my 45-minute presentation and it's kind of a full build-up. But it was a difficult one to answer. It wasn't one that you simply came to an answer. So, for example, if we talk about ESG being how we incorporate those principles into everything we do, it's not a bubble. It's here to stay. It's forever. It's the earth. It's the environment. It's everything we do. If we're talking about sustainable funds and products, and well, we've seen a hell of them. A lot of them attract large sums of money and then fall out of bed, perform very badly. This whole greenwashing, I'm sure we'll come to a bit later as well. So the point being that I think we need to distinguish between the concept of embedding these three key principles across everything we do, and I think most people get that, for better or worse, and we will probably need to unpack that a bit later. But in terms of some of the hot flows of money to certain spaces, unequivocally, there were bubble-like tendencies.
Kasief, your experience, your thoughts with all the noise that's going on around this topic?
Yeah, so again, so we've been sort of focusing on this area for the last 11 years, right? So it's not sort of new to us. I'm going to agree with Glenn that there are sort of various bubbles. That sort of where there's a lot of focus on particular areas, but fundamentally we all have to embed all three pillars: environmental, social, and governance, across our businesses, across the businesses that we invest in on behalf of clients, and that's the sustainable piece, right? Whether a particular focus on a particular aspect of the environment or social governance, those will come and go. So when the next Steinoff happens, there'll be another big drive, governance, for example. But I think the focus for us is let's make sure it's deeply embedded and it's sustainable across all three pillars.
And David, where does that debate come from? I mean, you already signaled that you think, that view of saying it's just only about the climate, is rather limiting in its perspective. But, where there's smoke, there's fire, right? Where does it come from and where do you think it's going?
Yeah, again, apologies if my connection is coming through rather weaker. I've got colleagues running in the background trying to give me a hand, so if you see me waving. Yeah, I mean, I'm not entirely sure. Maybe you're right. There's a lot more focus often on the S here in South Africa, given our social challenges, which, as you say, can be justified. But to say that environment and social are mutually exclusive would probably be slightly incorrect as well. I mean, if you think about those managing pension money, you want to manage so that your end investor has a world that's safely to retire into. If they're breathing clean air, drinking clean water, etc., that obviously adds a little bit to the complexity. Also, environmentally, here, if South Africa were to wean themselves of coal, instantly coal industry employs 100,000 people in South Africa, and that's never mind their dependence as well. So there's a social element as the world kind of moves towards green energy about that uptick in employment, and we know that South Africa has structurally, obviously, very high unemployment as well. So it's very difficult to talk about those separately. Yeah, sorry, I'm not sure if I've answered the entirety of your question, as I had my colleagues running to give me a hand here.
No worries at all, David. You absolutely have. Michelle, let me come to you. Let's zone into the post-trade industry. In a context of transparency and sustainable investing, as we've already discussed, please share with us what can potentially distinguish your industry from, the kind of stuff that Glenn and Kasief and David would typically do around investment decisions.
So I think we've talked a lot about, product availability and then the investment choice. And then you get to the post-investment joint monitoring environments, and that the coming together of that entire, let's just say, environment or ecosystem is important if we are going to ensure ongoing monitoring and transparency of investment choices. So if we look at how investment choices are made around ESG factors and analysis is conducted, it all really centers around information. And information is really a key, driver of sustainable investing in terms of the actual investment decision, but also then in terms of the ongoing monitoring of that investment from a transparency and adherence perspective going forward. So if the post-trade industry has access to unique information and can grow its access to different sources of information, such as the operations and processes that support investment activity, the management of positions, shareholder management, shareholder ownership profiles, voting mechanisms, and the execution of shareholder instructions, then the post-trade environment has a very unique value proposition that it can offer in terms of the ongoing monitoring and assurance of transparency of a particular investment or portfolio or fund. Monitoring singular investments is fairly simplistic. If you look at a green bond, for example, it typically comes with a framework that is typically transparent and in the public domain. And monitoring that investment in terms of ongoing assurances is maybe a little bit more simplistic. But when you start combining asset classes, and I talked about, a move towards, private equity investments, we're looking at fixed income, we're looking at potentially in the future, and I know not all regulations are there yet, but we're having a future and forward view of this around crypto assets as an example, then the value of bringing transparency in that combined portfolio is really where we feel, value can be delivered. Our client engagement in the asset management community indicates that there is a strong feeling that the trustee, in terms of current compliance on investment mandates and CISCA rules, etc., can play a role, but that the regulatory and legal frameworks are not there yet to support it. So if we talk about ESG and sustainable investing as a theme that should be staying in our environments, it means that there is going to have to be factors that are tied into the post-trade monitoring, like, for example, legal and regulatory frameworks that ensure that post-decision making on investments, that those factors that enable that decision are still monitored and sustained going forward. But my one last point, and then I'm going to stop talking, I promise, Andile, is that ESG objectives are often, and we've talked about environmental a lot, but there's also a role that custodians can play in terms of the social aspect of ESG, and that is that we have a role to play in terms of ensuring that we drive, where we can, financial inclusion through the catering of different products and accessibility engines, like, for example, fractionalized assets, etc., because we need to grow the investor community. Our final point is that we have a big role to play in market advocacy. We sit with ensuring the continued attendance from a virtual perspective to AGMs, and we must promote shareholder participation, particularly where decisions around ESG matters are concerned. Right. I promise you I will stop there.
No. You're not here to stop talking. You're here to keep engaging. David, you wanted to weigh in.
I did. I see Glenn also put up his hand at the same time. I'd be curious to hear the other participants' view on regulation. So we have a behavioral scientist here internally, and she's a lot smarter than I am and can articulate the issue a lot better than I can. But we currently did a survey with around 105 investment professionals, so portfolio managers and investment analysts, also trying to get a sense of progress within ESG internally and collectively, and whether something like regulation, which we've always been proponents for, and disclosure are actually aiding ESG or potentially even stemming ESG. And from a behavioral perspective, our findings are quite interesting, showing that it potentially creates a level of fear, and you're seeing a lot of legal work, or at least legal ramifications. DWS, Deutsche Wealth Services, were probably the first one that comes to mind. So it could actually create a bit of fear and therefore lack progress, where people are more comfortable saying, okay, we do ESG, but we're not going to champion it, because with that comes higher scrutiny and potential legal ramifications. I'd be interested to hear anyone else's view on that. I see Glenn does have his hand up.
That's very interesting. Glenn, please follow up on that conversation, but also move on to help me if I'm out there and now I want to measure and report on sustainable investing. What should I measure? Where should I start?
So I want to just revert back a little bit earlier to what you spoke about. One of my other passions in the world is acronyms. I mean, I mentioned the Brics. And when we did the Brics, it was BRIC, capital small S for South Africa. I think you capture a lot in that kind of, why did South Africa get invited to the Brics? We've done a very similar thing in ESG. And our report that we put out, so it's something similar to what David did. We wrote to every equity manager in the country, 85 of them, more than I thought there were out there, to get their views on the ESG space. And our conclusion on that was that the E was small. You said it earlier, the S was silent, the managers are not focusing, and the G was a capital. I think there's a lot to be said about that. So some focus on E. In South Africa, we've just avoided S because it's too complicated and too politicized, etc. And we focus a lot on the G, and the managers also said we've done a fantastic job at actually, and Mention was made of Steinhoff and Tongart and EOH and so many others, actually haven't done such a great job there either. So I just wanted to, pick up on that one. It's interesting, and I've spoken to some international people, and they score the E and the SG very differently in terms of what's big and small in their own environment. So it's also kind of regional in its perspective.
Very interesting point, which segues well to the question I wanted to pose to you around what should I measure? What should I start? So whoever I am, whether I am an investor and I put some money with an asset manager, or what questions should I be asking if I wanted to get a sense or a measure of whether or not my asset manager is doing sustainable impact investing?
It is kind of interesting because the whole concept of impact investing has a particular definition, and I'm not a very technical person, but my understanding it has to have two key aspects. One, it has to have intentionality, and the second, it has to be measurable. So when I was speaking to our ESG expert this morning in preparation for this, he gave the example invested into Tesla. It's a listed company. If you invest into Tesla because you think you can get good risk and return, that's not impact investing. But if your rationale, your argument for doing so is because it's green, going to save the planet, etc., your intention is in the space, that suddenly becomes an impact investment. So the same investment in the same company can be defined as impact or not impact. I thought that was a great example.
It is indeed. It is indeed. I want to bring in Kasief as well in here, because coming back home, Kasief, there's a lot going on. There's the role of government as well. I'd love you to touch on where do you see government in the whole kind of construct of impact investing. There's some good and some bad. It looks like a kind of a mixed bag right now. What's your take?
So just before I comment on government's role, I think we don't see it as one at the exclusion of the other. So, for example, on the social side, we deliberately back businesses that operate in the cold space of society, trying to deliver meaningful change, whether that be an SA taxi finance, focusing on entrepreneurs in the taxi industry, Urban Housing Foundation that focuses on inner city regeneration. We've just concluded a large affordable housing rental deal. Because we need to address these social issues in parallel to investing in clean energy, investing in water, and there are ways to put money into businesses that focus on those social challenges. I think segues into government's role. So, we're all aware that the government cannot solve this problem. There's not enough capital in the budget. And it needs to find ways to partner with the private sector. Where we've seen some progress is the widely kind of recognized renewable energy procurement program. But we've seen lots of initiatives, the National Infrastructure Plan, Operation Vulindlela. It's in the president's office. Infrastructure is one of his key sort of strategic items, but that to date hasn't translated in a lot of actually meaningful sort of projects getting spade ready, opportunities for the private sector to partner with government. That's partially the one reason that the government has acknowledged is capacity. They're working with CISA, the Association for Savings and Investments in South Africa, to help with that, fill that capacity gap. The rest, I think, it's beyond the scope in terms of speculating why things aren't coming through quickly enough. But and we've also decided that, again, in areas where we can deploy capital. So if you look at affordable housing, 6 million people are migrating to South African cities over the next 10 years. We have to work on solutions for that. If we don't improve digital connectivity, we marginalize the poor even further. The United Nations has proven that for each 1% uplift in connectivity, you have a meaningful impact on your GDP. And so we keep focusing on areas where we can deploy capital without necessarily waiting for government programs. Where those programs exist, in the energy space, we're happy to deploy capital there. I think the other area which is important for all of us is water. South Africa is the 30th driest country in the world. Not another great league table to be on. And we see this looming water crisis. Gqeberha has run dry. Cape Town almost ran dry. And we are looking at ways to mobilize capital into that space as well.
Great stuff. Great stuff. Now, David, back in 2016, the United Nations launched the SDGs, which Kasief has already touched on. And you look at South Africa, and we've already spoken about the fact that locally we've got our own priorities. We've got our own challenges. Government often speaks of reducing inequality, unemployment, and poverty, this triple challenge. How do the SDGs, our own issues, dovetail with impact investing when it comes to the role of government as it relates to the role of the private sector? Because there are certain things that seem to be government things that hopefully our taxes should be invested in. Private sector seems to be trying to play there. There's Kasief doing all sorts of things around water, etc. How do you rationalize the role of these two parties and how they play against or for each other? You might be on mute, brother.
Yeah, so I'm unmuted now. Yeah, that's an interesting question. I'll continue the discussion around water that Kasief brought up. So, sometimes you need a shock to drive a behavioral change, and we saw that with the city of Cape Town and Day Zero, and just our cultural shift towards water. So Nelson Mandela Bay is obviously going through their sort of heightened water restriction time and highly conscious over there. I don't know if I can speak on behalf of all other Cape Townians, whether they still collect their shower water. I'm not too sure. Maybe I doubt it. We've had a very wet winter. Similarly, on the governance side, I think it was Kasief or Glenn also brought up sort of Steinhoff. I think it was about 2017 now or so, and you found I was a sell-side analyst at the time, and you do a roadshow to all the big asset managers, and suddenly governance is very much at the forefront of their thinking. So sometimes you need that shock just to recalibrate and rethink and take stock of where you're on, where your important focus areas are. So I can speak from Nedbank and the SDGs. So there's 17 sustainable development goals, and it becomes overwhelming when you realize there are about 176 or whatever it is bullets within those 17 sustainable development goals. So Nedbank have adopted 9, and we have a CEO called Mike Brown, and who thinks sustainability quite deeply, and you find that this DNA filters a little bit through the company. So I think Nedbank have chosen about 9 of those most relevant to them. Within asset management, it's a bit more complex, because although we might not directly have a say on some of those SDGs or sustainable development goals, sorry, another acronym, Glenn was talking about acronyms earlier, indirectly, we're probably not impervious to all of them. So, and maybe to come to your question earlier, Andile, about what does an investor ask their fund manager, whether they're investing sustainably. If you're a fund manager and you've got all these 176 SDG bullets, a service provider has given you, 120 ESG metrics that you need to look at in your portfolio. Again, that becomes incredibly overwhelming. You get a bit of a cognitive overload, which can actually inhibit action as well. So our message generally within Nedgroup, so within the asset management of Nedbank, has to be to keep it relatively simple. So, that Economist article saying focus on emissions, that might not be every manager's prerogative. So what aligns with the fund manager's internal culture, their own value systems? We have a property manager in Australia, and they focus on gender equality. So all the companies they invest in have to meet a threshold of 30% female representation on the board. And if they don't, they engage their company to get above their threshold. Another one, didn't invest in companies that generate a majority of their revenues from fossil fuels. So as an investor, it's about, you're not going to meet a manager that is looking at every single umpteen number of metrics, but maybe ask what's close and dear to you, and which manager is probably managing money in a similar sentiment.
Right. Glenn, I'd love you to weigh in on this one before I take Kasief. You're quite passionate about measuring the impact these funds are having on South Africa, asking government how they're going to use the money you lend them to improve South Africa. How do you see the relationship between the private sector and the public sector when it comes to impact investing locally?
Put it this way, if this is the biggest challenge of our humanity, then we're not going to do it on our own. So unless we start working together, clearly we're not going to solve this. It cannot be the private sector on its own, nor can it be government on its own. In fact, we need these kind of these organizations like United Nations and others that are bigger than. So I think what government always has to do, whatever they do in an environment, is to create an enabling environment, to be supportive. In some ways, we haven't always had that support in the local environment, so that needs to change. If we're going to solve this problem, we're going to have to do it kind of all together. I think that's critical. We touched a little bit on kind of where do you focus your attention. David's mentioned 17 SDGs, nice acronym. There's another one called the NDP, the National Development Plan in South Africa. So the fund that we've launched, we tried to match the two together and actually came up with a very similar answer to what David mentioned. 7 to 9 areas of overlap between the two, those that we thought were more pertinent to South Africa, and so decided to focus most of our time and attention in those specific areas. And then obviously we're not in Kasief's position where he's actually evaluating projects, we're evaluating asset managers. So we're one step removed, and we've got a whole due diligence process, including on Mergence, of kind of how we look at managers and what we're looking for, and trying to identify as best you can. And it's not so easy, where managers may be greenwashing, or we could use stronger language in that, etc.
Yeah. But Glenn, how then, to what extent then is the need for a more standardized approach to reporting and to measurement kind of heightened? Because the JSE has tried to put some guidance for listed companies. There's a lot going on globally. But to a large extent, part of the problem or part of the reason why people can greenwash, or to use a stronger language, I guess, can mince people around, is because you may not know when I'm messing you around, isn't it? Because, unlike the accountants, and they're a bad example because IFRS has started a whole industry on just how to report according to IFRS before you find yourself in trouble. I'm not suggesting, ESG should go there, but at least there is some agreed framework of how reporting should be. We don't quite have that in ESG. So how do you do it as RisCura, who has to look at asset managers outside of just kind of financial performance, but also performance when it comes to sustainability and impact?
I think it's a really good question. I think it's an important question. I have kind of two answers to it that are somewhat contradictory. The first aspect is we need to sort out this comparability. And every asset manager is telling us, and we all know that unless we can start comparing things in a more similar way, we just can't come up with a framework that makes sense to anyone. And there are a lot of initiatives underway. The JSE is just one of 20 that one could kind of mention. All of that's good, and I think it's important. But I do worry a little bit on the other side as well, of us being focused and forced into a certain way of thinking about the world. So to be able to have something that's comparable is great, but I think, and I won't mention by name, but some of the asset managers in the country really challenge some what seem like obvious answers. You have to do this from an ESG perspective, but the net unintended consequence of that can be very negative. So I don't want a common framework to stop us thinking and applying our minds and doing the right thing because we've thought about it. And that right thing can be different between different institutions, companies, organizations, because you've got different DNA, responsibilities, areas that you can make a difference. So we have to sort out the comparability. Progress is being made. It is fairly early days, but that is a key need, but that doesn't stop us thinking and applying our minds and seeing the world a bit differently. I think it's important that we don't pigeonhole everyone to the same kind of narrow box.
I'm itching to hear Kasief's view. Kasief, I'll need your view on the government versus private sector collaboration or not. Definitely need your view on the issue of reporting as an asset manager.
Yeah, so if talking about acronyms, so let's start with acronyms. If you Google ESG frameworks now, you'll get a list of 20 to 30, right? All recognized in certain parts of the world, others not so much. So how we went about it is we said, we want, certainly as a South African or investor in Africa, we want to align with national development plans of the respective markets in which we operate. So we've selected a few key social development goals, sustainable development goals rather, from the SDG framework, knowing that to avoid greenwashing, you can't possibly try and address all 17, right? So you've got to focus in trying to align it, overlay national development plan priorities, and then drive your strategies in terms of your funds you manage and the type of assets you invest into to align with those. That also helps with improving reporting and transparency. Yes, you're always going to have opportunities that's going to touch on other SDGs. So, if, for example, if we're investing in water, it doesn't easily map onto the 3 priority areas. But we're not going to stop investing in that space. But we want to be able to, as a start, is elevate and improve transparency and reporting on those three keywords and demonstrate that alignment overlap with the National Development Plan. Right? I think so that to us was a critical step: is which framework are we going to use? How do we prioritize which particular objectives we're going to drive? And does it dovetail with the National Development Plan? And that's really the basis on which we're defining our framework currently.
And if I'm a portfolio company and I get investment from Mergence, I would imagine that for you to be able to tell your investors that you're doing right by the commitments you've made, you're going to have to somehow get that commitment from me. How does that work out? To what extent are you able to get that commitment delivered by the portfolio companies?
So we try and make it contractual as well. As a minimum, for example, reporting on measuring and reporting on their own sustainability goals is now a contractual undertaking. It's no longer just submit your management accounts quarterly and your financial statements annually. We want to see your ESG report on a similar regular basis. We support our portfolio companies with frameworks as well. So, for example, have critical incident management process. If there's environmental risk on our water assets, if there's ever, heaven forbid, some sort of contamination of that water, how do we manage that critical incident and the response plan to that? So it's a combination of contractually driving the behavior, to make sure that, especially when we're lending money, it's easier to say, have a reporting obligation, and we can call, in worst case scenario, we can call an event of default if you don't behave responsibly. But we go one step beyond that and saying we also need, because corporates, especially medium-sized unlisted businesses, are also grappling with these issues. So we need to assist them in understanding and embedding these frameworks and being able to report to us how they're performing against that, so we can consolidate and provide that back to our investors, including the RisCuras and others in this world.
Yeah, in fact, I would imagine that those medium-sized businesses are probably struggling more than the bigger and more established kind of institutions. Before I take David's follow-up, let me come back to you, Michelle. Let's give these investing boys a break. Let's come back to the post-trade industry on this theme of measuring, monitoring, and reporting. What challenges are foreseen for custodians who are looking for some kind of support when it comes to post-trade monitoring and oversight, especially when the investments that are being made are in the sustainable investment space? Is there anything kind of related to active monitoring or active compliance that happens after these kind of trades are complete?
So right now, Andile, and thanks for the question. And some of the challenges that we would face in really providing that consolidated level of reporting are very similar to what my esteemed panelists have spoken about. We see that the post-trade environment, so trustee, custodian, can play that role of consolidating reporting, but the primary challenge is really around the data. We talk about the fact that there is a proliferation of data and there is more information available, but it's inconsistent. There are more ESG rating providers, for example, but the terminology is inconsistent. There is a lack and gap in skills and expertise. And then there are evolving regulatory practices that are not, consistent either. When we start talking about, if we were to pull in information, for example, on greenwashing elements, and we've spoken a lot about that on the panel today, is that really who are the right parties to assess this? As the demand for ESG assurance increases, there's a debate around whether audit firms are the right place and can cope with that demand around information provision. So our biggest challenge in terms of looking at how we would provide that level of consolidated reporting is around the data quality. Now, even from an investor perspective, if you start to strip out individual, let's just say, sustainable investments, you also have the unintended consequence of potentially creating a divergence in terms of that instrument versus the rest of the portfolio. So there we'd also have a challenge in terms of portfolio reporting. Right now, there's no regulation. And we talk about regulation in our context as a positive development, because basically it works as an enabler to say that if there is, like, for example, in the unit trust environment, there's a regulation, there's an investment deed, for example, that we need to measure against, it enables us to set up a compliance monitoring standard and system that we can support our asset managers in providing that information to their clients. Now, from a global perspective, we have looked at a proof of concept where we've taken a portfolio and looked at what data is available across our footprint for particular Asia-based investments. So even in other countries, it's really, really challenging. So 30% of companies had ESG data available, and key vendors in our assessment could provide another 50%. But for the remaining 15, I think, if my math is correct, there was nothing available. So our ability to build up information related to that portfolio is really where our challenge, would lie. Having said that, I think that we will get there. I do think that, the post-trade environment already is geared towards providing compliance and performance monitoring specifically in the trustee and fund administration space. And we should be very well placed to be able to develop this capability, but the data elements are challenging, and we would need to build tools around that.
Okay, great stuff. Thanks, Michelle. David, you wanted to weigh in on an earlier comment, but I also wanted you to just take us through those 4 key focus areas that you guys focus on in your business when it comes to sustainability, because I think they are very relevant.
Sure thing, Andile. Sorry, I took a look at the time and swiftly lowered my hand, so I won't eat into too much time here. Wanted to give Michelle her chance there. Yeah, so just on the aspect of reporting and disclosure, so more cognitive overload, another acronym is the CDP, or Carbon Disclosure Project, which I think might be a United Nations initiative. So out of the JSE, especially the large cap and maybe the mid cap as well, you'll find almost 100% of companies report on carbon. Whether the auditors, I'm not sure if they've just assured the reports or if they've actually done it themselves. I doubt that at the moment. So disclosure from a carbon point of view with South African private sector corporates is actually very high. Water, also one of the highest in the world. I think up to about 80% or something of our listed companies are reporting on water into the CDP. I stand to be corrected. I haven't looked at that for a couple of years. So water reporting is quite good. We spoke about the water shock. So, if we think about during the droughts here, a third of South Africa's water is lost to archaic piping infrastructure, so leakage of water. So you found that the private sector built a lot of their own efficiencies around the use of water, and capital expenditure came through there. And then I guess maybe my last point on that government side is what a wonderful update we had in terms of renewable energy production and being able to generate your own power. I mean, you have Anglo's generating, I think it's 3 gigawatts of their own power. When you think about South Africa's national generation capacity is close to about 50, that's 6% of a single company generating about 6% of our national emissions in their self-production through renewables. So yeah, that's a lovely example of, when government opens up a little bit to the free market, what can happen from an energy perspective. So in terms of what we're focusing on, so, we spoke a lot about climate change. Biodiversity loss is our second environmental focus area. I think if anyone's well-versed in sustainability, they understand the dire state that biodiversity and biodiversity loss is in, even probably more so than climate change, for those that are familiar with the Stockholm Resilience Center. Then on the social side, it's inclusion and diversity, or diversity and inclusion. I spoke a little bit about what of our managers are doing in that space. And then fourthly is human and labor rights, which, we spoke about the opaqueness and the difficulty of social. And I think this is a classic example of how difficult it is to look at your portfolio through a human rights perspective.
That's very interesting, a human rights perspective. Guys, we've got a couple of questions. We're going to knock them off one by one. I'm going to mention your name and send you a question. Kasief, you're going to take this one. It comes from Marcel Henry. How do we determine the tangible cost benefits of ESG? In other words, what are the costs versus the benefits of ESG, if there are any? If you had to determine the cost versus benefit analysis of ESG, how would you do that? Kasief?
Yeah, so I kind of answer will be a bit of a skirt around the direct element, but where we're starting to see the benefits certainly is some of the commercial banks are now starting to offer incentives, right? So on our last transaction in the affordable housing space, the commercial bank that did the senior debt was a debt into that structure, actually offers us a 0.3% discount, which is small, but it's the first time where there's actually tangible discounts because of the social impact that those portfolio buildings have in terms of addressing the gap in the housing market. So we similarly we expect to see, as we strengthen our frameworks within our portfolio companies, we're starting to see investors, and certainly not in SA so much, but globally, investors are starting to pay a premium for companies that have sustainable business models, are able to report and aggregate that data to investors. So it's certainly the benefits are becoming more tangible and more near term. The costs, again, it's difficult, as we said, we kind of push that onto our portfolio companies to a large extent. So this is now, we're coming in as an institutional investor, these are our non-negotiables, but it is a balancing act. You can't suddenly overlay 5 million worth of additional costs. So at the moment, we're not really measuring the cost of compliance yet.
No, absolutely. And I guess it's understandable that the portfolio companies will probably carry the lion's share of that. Glenn, let me come to you. Question, very interesting question about the difference between ESG and impact investing. It says, comes from Mandy, ESG and impact investing are different. How are the organizations unbundling this? Often the difference between the two is not understood. If your ESG is great, does this mean the organization or the investment is an impact investment?
I think it's a really good question. As I say, I don't like to get too stuck into the technical details of the different definitions because they are hard. Impact has those two specific measures that I mentioned earlier, the intention to make this positive change, and then also the measurability thereof. So Kasief has spoken about, you go into a certain thing, you want to know how many jobs did you create, or trees did you plant, or kilowatts of green energy did you actually put out? And so it's got that element to it. So these are all subsets of the ESG or sustainability broader area. And you may well tick off many boxes for ESG and not be doing impact at all. What's really important, especially from my industry, the pension fund industry, is the vast majority of our investments, our clients' investments, the market's investments are enlisted. And on the listed side, very hard to measure impact. And in the secondary market, when shares trade on the stock market, there's no impact there whatsoever. So it actually is talking about a subcomponent and a small subcomponent of the unlisted part of the market, often including infrastructure, but then, kind of the impact thereof. So you work down from the big side, down, or maybe this way rather, from big down to smaller. I hope that helps.
Got you. Thank you very much, Glenn. David, Roy Harrington, short question, but to the point. How does South Africa compare with our main economic trading powers when it comes to sustainable and or impact investing?
With our main economic trading powers, I'm assuming they mean what? China, India, Europe, the US,
Europe,
our neighbors.
Yeah.
How do they compare when it comes to sustainable investing?
Yeah,
it's interesting.
How are we doing?
Yeah, not too bad, not too great. I mean, the interesting thing is when we get a lot of questions, we have a London office, and the notion that your investor in the UK, for example, is probably a little bit more demanding of their managers from an ESG perspective. We get a lot more questions. The majority of questions that I get from local, your man on the street, is more around how do I gain access to green energy, some of those sort of more maybe entry-level type questions. It also takes on quite a different approach. I mean, in South Africa, we've already spoken about some of the complexities. It's also around, what type of stocks are you holding? So that whole approach of, do you exclude certain sectors as they're quantified or qualified as sin stocks? Glenn spoke about the ESG almost like an asset bubble. Interestingly enough, the ESG funds, flows into ESG funds were positive during the COVID sell-off, when the rest of the market, they saw money exiting equities. So it actually completely bucked the trend. We then saw obviously coal prices and oil prices being very high, and you maybe saw ESG style funds underperforming the market because they didn't hold these type of stocks. So it all depends on your stance on ESG. If you think it's around exclusion, and not many South African managers exclude sin stocks, I think the nature of the South African exchange doesn't really make it very pragmatic or practical. If you think about, British American Tobacco, how heavy you are in terms of fossil fuels, etc. So that stance, we kind of prefer the stance of, if you're going to be in a company, yes, it might be a sin stock, but if you can somehow as a shareholder put pressure and the right type of pressure on their company to manage their ESG impacts through time, I think that is merit as well. It's not just about investing in the best companies, sometimes the worst companies and holding them up to a higher standard.
Absolutely, David. And just to wrap that thought up, I guess it's also quite important that we analyze and monitor this going forward, right? Because oftentimes, we just say, if you're fossil fuel, you're bad, or if you are coming from this industry, you're bad. It has to be about the additionality. It has to be about how going forward you're going to do better than you did before.
Yeah.
But ladies and gentlemen, let me stop there. Unfortunately, we've run out of time. I really do appreciate your input. David, thank you so much. David Levinson is head of responsible investing at Nedgroup Investments. Michelle Swanepoel, managing director, regional head for financing and security services at Standard Chartered PLC, of course, for Africa. Glenn Silverman from RisCura, investment strategist and director there, and Kasief Isaacs, the senior investment principal at Mergence Investment Managers. Thank you also to each and every one of you guys who've joined us this afternoon. We really do appreciate it. Hope you enjoyed participating in this Financial Mail Green Economy Digital Dialogue as much as I enjoyed hosting it for you. And a final thank you to also our sponsors and our partners, RisCura themselves, Mergence, Nedgroup, and Standard Chartered, and of course the team at Financial Mail and at Arena Events. Thank you so much for putting this together. It's just gone 2 o'clock, ladies and gentlemen. From me, Andile Khumalo, it's goodbye. Enjoy your lunch. I will see you again next time. Cheers, guys.